Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news so you don't have to. My name is Not Important, and I'm your host. It's Friday. Let's go. Crypto exchange Huobi experiences heavy token outflows. Nansen, Justin Sun. Tron prices sink 8% USDD. Depegs amid drama at Justin Sun related Huobi crypto exchange. Huobi confirms 20% layoff, denies insolvency rumors. And kind of a similar article, doubts amount over Huobi's future as harsh layoff rumors denied. And Alex Mashinsky sued by the New York AG for allegedly hiding Celsius' dire financial condition. Let's get into it. Bitcoin going down. Just like we were talking about yesterday, we got rejected from our resistance levels here at around 16.9. We are now heading down. I'm not sure how far we'll go down, but if we continue on this trend, we're going to probably get around to this 16.4, 16.5 range, hopefully get a bounce, and then come back up. Guys, going into the weekend, could be volatile. Keep your eyes on it. Stop losses in place. Nothing new. Ethereum. Again, we got rejected off of that 1260 level. Now we are starting to come down. Hopefully we get some relief at that 1218. If we do break through to 1218, the next level I'm looking at is 1187. And then the absolute fear and scary level, if we break through that, you're looking at 1162-ish, something like that, guys. Again, like I said with Bitcoin, going into the weekend, could potentially be volatile. If you are trading, be smart. Use your stop losses. You know the drill. All right, moving on. I decided to just focus on this Huobi stuff because it seems to be the biggest story right now, and it's on all the news outlets. This is what everybody is talking about. So I'm sure a handful of these articles are probably going to repeat themselves. So if I feel like I don't need to go too deep into them, I won't. But let's just go ahead and start. Crypto exchange Huobi experiences heavy token outflows. On-chain data shows more than 60 million in tokens fled the exchange in the past 24 hours, while stablecoin reserves have dropped 9.5% in a week. Traders may be skeptical about the continued health of Huobi, on-chain data indicates. The exchange, which saw turbulent trading in Asia hours after for its AT token after it confirmed a 20% headcount reduction, has experienced outflows of $64 million in the past 24 hours. This brings its weekly outflow count to over $100 million, according to Nansen data, and compares with $22 million at rival Kraken. Nansen notes that the highest outflows came from stablecoins USDT, USDC, and ETH, wallets that had high balances. Sorry, I missed that, guys. And this just shows tweets. Everything's tweets, shows all the outflows, etc., etc. If you guys want to, I guess, follow this on Twitter, go over to the Nansen Twitter account. Moving on, Huobi's stablecoin balance currently sits at 681 million, down 9.5% in a week. The data shows a sharp increase in outflows of stablecoins from FTX occurred before that exchange collapsed last November. So the rumors is that that Huobi might be the next insolvency crypto that goes down. We'll keep our eye on it. Huobi seems to be very vulnerable at the moment, said Kai Young-ju, CEO of analytics firm CryptoQuant. Do you know that Huobi's Bitcoin reserves are down 90% in the past year, while Binance's have more than doubled? Huobi's active user addresses have dropped significantly to according to CryptoQuant. Huobi's user activeness dropped 44x lower from peak in May of 2019 and 20x lower than Binance as of the 3rd of January 2023, it said in a report shared with CoinDesk. Of particular concern during this stress test is the health of Huobi token. CryptoQuant pointed out in a recent report, all of the exchanges Huobi has what it calls the dirtiest reserves, being the most reliant on its exchange token, OKX, and Deribit have the cleanest, it said. Nansen notes that Huobi holds 81% of circulating supply, or 131.6 million out of 162.2 million of the HT token. According to CoinGecko data, the token had a 24-hour trading volume of only $21 million compared with a market cap of $770 million. Its plus 2% bid depth also remains comparatively narrow according to CoinGecko data when compared with other tokens of a similar market cap. In a recent column, Kaiko's director of research, Clara Madeline, I'm so bad with names, guys. I suck. Pointed out that the lack of 2% bid depth was a major red flag for FTX's FTT token. Meanwhile, on-chain research house Look On-Chain said Justin Sun, who sits on Huobi's advisory board, cashed out $100 million in USDC and USDT from Binance. Huobi's key to success is to ignore FUD and keep building, he tweeted, referencing Justin Sun. Again, with the stuff we're reading, and if it's true, if it's not, whatever, if it's just FUD, what I've been hearing and reading is that Justin Sun has been heavily denying the FUD rumors on Twitter. And moving on with that. Tron price sinks 8%, USDD Depegs amid drama at Justin Sun related Huobi crypto exchange. Community sentiment soared around Huobi, which has Tron founder Sun as an advisor after it said it will lay off hundreds of staff in the coming weeks, which we'll get into next. The price of Tron, the 18th largest token by market cap, tumbled Friday amid tensions stemming from crypto exchange Huobi as the broader crypto market held steady. Tron founder Justin Sun sits on Huobi's advisory board. The exchange said Friday it will cut headcount by 20% and require employees to take their salaries in stable coins. I'm sorry, I'm not laughing at that. It's just, which tells me they don't have liquid to pay them. I mean, again, that's where my brain would go. It also closed internal staff communication channels to quell a rebellion. I'm sorry, guys. It also closed internal staff communication channels to quell a rebellion, according to reports on Twitter. TRX fell nearly 8% in the past 24 hours, data shows. The price is above support level of 5 cents. And if it drops below, the token could slip to as low as 3 cents. Price chart shows Huobi's native HT exchange token have lost as much as 11% in the past 24 hours. Now, I don't know if you guys were around for the last bear cycle, 2018, 2019, but I was in Tron. Tron went down to 3 cents. That was kind of where it found stabilization. It was up at like 27, almost 30 cents at the height of the bull market. Went down to 3 cents, and I held it all the way to the bottom. Good lesson to learn, right? All right, moving on. The Tron-based stablecoin USDD fell 3 cents, effectively losing its intended peg to the US dollar. Such price action caused the value locked on Tron-based decentralization application to fall by 2%. DeFi Llama data shows. As such, futures tracking TRX saw under 1 million in liquidations on exchanges, suggesting the selling was mostly spot-driven. Spot refers to actual tokens, while futures and derivatives financial instruments that allow traders to bet on the prices of underlying tokens. Meanwhile, securities firm Peck Shield noted on Twitter that crypto wallet addresses linked to Sun moved over 50 million to crypto exchange Binance. So I guess Sun pulled out and moved his money over to Binance. Not a good sign. The fund movements came amid speculation among Twitter users about the overall health of Huobi and the safety of customer funds. Data from blockchain analytics Nansen showed Huobi had seen some 60 million in fund outflows in over the past 24 hours. Sun, Tron, and Huobi did not immediately respond to CoinDesk's request for a comment. And again, yeah, it's kind of the same stuff. Everybody's beating the same drum about what's going on, but we're just going to roll through these real quick. Huobi confirms 20% layoff, denies insolvency rumors. Yet they're paying their employees in stablecoins now. Not looking good, guys. It's getting dicey. All right. Key Huobi execs, including Huobi Group CFO Lily Zhang, allegedly left the company a few months ago following the new shareholders takeover. Huobi's cryptocurrency exchange has confirmed plans to lay off 20% of its employees as part of the ongoing restructuring following Justin Sun's acquisition of the firm. The planned layoff ratio is about 20%, but is not implemented now, a spokesperson for Huobi said in a statement to Cointelegraph on January 6th, which is this morning. Interesting. The representative emphasized that the allegations of Huobi firing as many as 40% of employees is a rumor. But we're doing half of that. Huobi has established a new organizational structure after the new shareholders have taken over. The spokesperson said, adding that the firm has adjusted the business departments. With the current state of the bear market, a very lean team will be maintained going forward. The personal optimization aims to implement the brand strategy, optimize the structure, improve efficiency, and return to the top 3, Huobi said. In the statement, Huobi also stressed that recent media allegations of the cryptocurrencies exchange purported insolvencies are untrue. Every single one of them says that, y'all. So who knows? The company's representative stated, "We are aware of the comments regarding the Huobi app and the safety of user assets. Such unfounded and inflammatory rumors not only damage Huobi's brand image, but ultimately affect the interests of Huobi users." The news comes shortly after Sun publicly addressed rumors of Huobi's insolvency, saying that the business state of the exchange was fine and users' assets were fully protected. He also promised that Huobi will, quote-unquote, fully respect the legal demands of local employees. As previously reported, Huobi founder and majority shareholder Leon Lee sold his entire stake in the crypto exchange to Sun linked About Capital in October of 2022. Apparently, Huobi subsequently launched its recognition efforts as some key executives left the company soon after Sun took over the firm. A former Huobi employee told Cointelegraph about leaving the firm a couple of months ago as part of a broader transition when it was rumored that Sun was acquiring Huobi. Quote unquote, "From what I know, there was a management shakeup first," the former employee noted, asking to remain anonymous. According to the source, Huobi Group Chief Financial Officer Lily Zhang left the company a couple of months ago as well. Huobi did not immediately respond to follow-up questions from Cointelegraph. I mean, could it be a corporate takeover? I don't know, guys. Look, I'm just some dude sitting in his office reading the news in the morning, drinking coffee. That's just a mediocre trader. But I don't know, man. It looks shady to me. It looks super shady. What do you guys think? Comments down below. Let me know. You know the drill. All right, continuing on. Doubts mount over Huobi's future as harsh layoff rumors denied. Canceled bonuses, pay disputes, massive layoffs, and communication blackout has been claimed as part of the goings on at the crypto exchange. Speculation on Twitter that crypto exchange Huobi has laid off staff has shuttered internal communications, have prompted the community to advise users to withdraw funds despite an advisor to the exchange denying the rumors. In a January 5th tweet, Huobi advisor Justin Sun addressed rumors of purported insolvency, saying the business development of the exchange was quote-unquote good and security of users' assets will always be fully protected. Funds are SAFU, y'all. Sun also seemingly brushed off speculation around disgruntled staff, saying Huobi will fully respect the legal demands of local employees. Earlier on January 3rd, crypto journalist Colin Wu reported that Sun changed Huobi employee salaries from being paid in fiat to being paid in either Tether or USDC. Wu claimed the staff who disagreed with the change could be laid off. Guys, this is my biggest... So out of all of this, all the rumors, this is really interesting to me as a person who has an okay handle on business and you know, corporations, etc., etc. And again, I'm not the best at it, but this to me looks like insane insolvency. And again, I could be wrong. I don't know what they're trying to do or what their structuring is, or they could be doing something that's completely on the up and up. But from an outside perspective, as a retail investor, as a retail trader, I'm going, okay, so you're going to pay in USDT and USDC because you don't have the cash to back the paychecks. And we all know, you know, all the rumors of Tether, how they can print Tether constantly and pump the markets, etc., etc. So who knows, man? But that to me is the biggest red flag. Let me know what you guys think. Am I an idiot? Am I wrong? As well as, or do you agree with me? Let me know in the comments down below. But citing insiders, we reported in December that Huobi canceled year-end bonuses and was preparing to cut up to half its 1,200 person staff. Well, now they're saying in the last article I read that 50%, or I said 40% was a rumor, but they're definitely doing 20%. They just haven't done it yet. That still doesn't look good. The move to change the salary payment from fiat to stablecoins sparked protests from some employees, according to Wu. A January 4th tweet from Twitter account BitRun claimed that a communication group with internal employees at the exchange has been shut down and all communication and feedback channels with employees were blocked. BitRun added they weren't ruling out a revolt by Huobi employees who could directly rug away user assets or programmers add backdoor Trojan horses, claiming the practice was not protected by domestic laws. Huobi is based in, I am not going to try to pronounce that, with offices in Hong Kong, the United States, Japan, and South Korea. It's a publicly listed company on the stock exchange of Hong Kong. The ominous warnings was enough for one Twitter user to claim Huobi seems to be melting down in real time, and others suggested users withdraw funds from the exchange due to the rumors. Look, guys, as lame as it sounds, as redundant as it sounds, because everyone on YouTube and all over crypto space is saying it, not your keys, not your fucking crypto. And I'm not on Huobi. I all my stuff literally I have right now, guys. Too, a little disclaimer: I only have 2 buy orders open right now. One on KuCoin, one on Coinbase. Everything else that I hold right now is on a Ledger wallet. I don't like when FTX, Luna, all that stuff went down. I was like, I'm out. I'm not trying to trade right now. I'm not trying to do anything crazy. So I was like, what's the point of even having myself on an exchange? It's the first time ever since 2017 that I personally got everything off exchanges. And just, I guess out of sheer laziness, I never did it before. But when I saw this stuff, I pulled. So if you're on Huobi, look, get off. I mean, move to Binance, go to another exchange. There's tons of other exchanges, KuCoin, whatever. And I'm rambling, but I'm serious, man. Don't be another victim of this bullshit. If you're not trading actively, get your coins off the exchange. Just do it. So sorry, guys. Moving on. Huobi token is down nearly 7% over 24 hours, according to CoinGecko data. Cointelegraph contacted Huobi for a comment, but did not receive a response at the time of publication. All right. So, guys, look, I picked up as many articles as I could find in the headlines of about that were about the Huobi issues going on right now, because it seems to be the biggest story. They could potentially be the next FTX, the next Celsius, the next Luna, and it look, the stuff doesn't look good. Whether it's FUD or not, it doesn't look good. Get your stuff off it. Get your coins off. Get your money off of the exchange. Why not? Like you have nothing to lose, in my opinion. But that's why I covered so many of it, because it's popping right now. It's all the headlines. So let me know what you guys think about this in the comments down below. Do you think it's FUD? Do you think it's real? Are you trading on Huobi? Let me know. And guys, last but not least, we're gonna wrap up this Friday with this final story. Alex Mashinsky sued by New York AG for allegedly hiding Celsius' dire financial condition. Well, yeah, everyone does that. Just like Just the Sun right now saying everything's fine. Just like Sam saying everything was fine. And then everything tanks. So let's go. Alex Mashinsky actions leading up to Celsius declaring bankruptcy allegedly contributed to investor losses by misrepresenting the platform's financial condition. New York Attorney General Letitia James has filed a lawsuit against Alex Mashinsky, alleging the Celsius founder and former CEO made numerous false, misleading statements which led to investors losing billions. In a January 5th announcement, New York Attorney General's office announced the lawsuit, which allegedly involves defrauding investors, including more than 26,000 residents of the United States, out of billions of dollars worth of crypto, according to James. Mashinsky's actions leading up to Celsius declaring bankruptcy contributed to investors' losses by misrepresenting the platform's financial condition and failing to abide by certain regulatory requirements. quote unquote, as the former CEO of Celsius, Alex Mashinsky, promised to lead investors to financial freedom but led them down a path of financial ruin, said James. The law is clear that making false and unsubstantiated promises and misleading investors is illegal. Today, we are taking action on behalf of thousands of New Yorkers who were defrauded by Mr. Mashinsky to recoup their losses. Good luck. In addition to Mashinsky's allegedly pushing a false narrative through appearances at conferences, on social media, and in interviews, James said Celsius customers did not have the same protection as those at traditional financial institutions. Come on, due to the platform not being subject to regulatory requirements. The lawsuit aimed to ban Mashinsky from doing business in New York. New York and crypto are a joke. Sorry, guys. All right, New York in the future, as well as having him pay damages, restitution, and disgorgement to affected Celsius investors. Disgorgement. Discouragement? Is that discouragement? Am I an idiot? Probably. Moving on. Celsius filed for Chapter 11 bankruptcy in July of 2022, leaving many crypto users with assets locked on the platform and a balance sheet gap in the billions. Mashinsky resigned as CEO in September, reluctantly, saying his role had become an increasing distraction amid users facing difficult financial circumstances. I don't know, man. Whatever. It's New York. It's the Attorney General of New York. Whatever. We'll see what happens. I don't know. For the longest time, you couldn't. I don't even know if you still can trade crypto in New York. Yeah, I don't know. Crypto's in New York has always been a weird thing. I don't live in New York. If you do, let me know. Can you guys trade out there or use VPNs, or is it legal now? Let me know in the comments down below. But that's it, guys. It is Friday. This has been a rough week. I don't know why. I've been waking up and just I can't get the words out of my mouth, so I apologize for sounding like a damn amateur while reading the news. But per usual, guys, if you do enjoy the content that I provide here on Boring Crypto IO, please, by all means, feel free to subscribe to the channel. Turn on that bell for notifications. Like the videos. And go enjoy your weekend. Be safe out there. Use your stop losses. I am unable to get words out of my mouth. I'm out of here.